Bitcoin has crashed to 94K and people are hitting the panic button. But let me tell you something.
Euros are going to zero. The yen's going to zero. The Chinese currency is going to zero. It's all going to zero against Bitcoin.
Chill out. Bitcoin's up 112% this year. But I'll be real with you. Based on the global M2 money supply, we could see Bitcoin prices in the high 70K to 80K range here in the next couple months. But do you remember April of 2020? Oil prices didn't just crash. They went negative. Imagine paying somebody to take oil off your hands.
I don't think so.
People thought the world was going to end. By 2022, oil was trading at over $100 a barrel. Just like oil, Bitcoin crashing to 75 to 85K presents a generational opportunity.
It's going to surge to 180 and crash to 140, and people will be freaking out about it again.
The lesson is simple. Crashes don't destroy wealth. They transfer it. What are you going to do if we see a pullback to 80K in Bitcoin? This is Dante Cook with Bitcoin Simply. Let's get into it. Bitcoin could be up over 1,100% over the past 5 years, which it is, and people would still find a reason to complain about it. You have to realize, when pricing Bitcoin in dollars, the dollar is going to zero. When pricing goods that you want and need in dollars, well, those goods are going to infinity. Let's take Campbell's soup, for example, the #1 measurement for inflation in the world. Campbell's #1 selling soup, the tomato soup, cost just 9 cents a can in 1971. And that same can of soup, same ingredients, same processing, same cans, cost $1.24 in today's money. The top 10 items on McDonald's menu have increased at ridiculous rates over the past 10 years, with the McChicken being up 199% and the McDouble being up over 160%. Here's what that looks like for the other top 10 fast food chains. They average 50% increases a year. Inflation-adjusted home prices have more than doubled over the past 134 years. The average U.S. family health insurance premium has increased from $6K in 2000 to $26K today. That's a 342% increase. Even though we're more productive, your wages haven't kept pace with productivity gains. And this is because everything changed in 1971 when we moved off of the gold standard. And since then, the disparity between boomers and everybody else has only grown wider, as boomers now control almost 52% of global wealth. And this is because of one reason and one reason only. We live in a debt-based system. The amount of money that's chasing fixed goods continues to expand exponentially year after year. Even governments have no choice but to serve their fiat master, which is why you see an explosion in the US government's interest payments. This chart doesn't stop. And this is what causes most assets to underperform. Saylor explains the investor's dilemma here.
Investors have a simple dilemma. How do you make money? And what does it mean to make money? Well, how do I outperform the cost of capital? If we look at the performance of a bunch of assets, and this is most assets over the last 14 years, what you can see is that, investing in a bunch of things don't even beat the CPI, but there are a number of things that will beat the CPI. I mean, your typical diversified portfolio, your stocks, your real estate, et cetera. But the question is, what's the real benchmark for an investor? And I don't think it's the CPI. The CPI is a very synthetic metric, which is cherry-picked by a bunch of government-paid economists in order to be the lowest possible measure of inflation. If things get too expensive, they throw it out of the CPI. A much better measure would be the monetary inflation rate, or the expansion of the M2 money supply. And it turns out that the expansion of the money supply very, very closely tracks the performance of the S&P index over 100 years. And when you think about it like that, what you realize is that when you invest your money in the S&P index, you're not making money. You're just not losing money. If you were rich 100 years ago and you held a diversified portfolio of stocks, you're still rich. If you bought a bunch of currency or bonds, you're poor.
When the money continues to inflate, you need assets that grow faster than the rate of inflation in the money. And there seems to be this thing that's working in that favor, this magic internet money thing called Bitcoin. When money is printed, Bitcoin gains disproportionately. In fact, Bitcoin moves in the direction of global liquidity 83% of the time, which is the most of any asset class in the world. And if you believe that money will continue to get printed forever, well, then Bitcoin seems like a pretty good investment. But right now, global M2 is contracting. And based on this chart from Joe Consorti, with a 70-day lag in M2, Bitcoin seems poised to find levels between the high 70K and 80K range. And this presents a generational opportunity. But before we get into that, I want to take time to recognize our sponsor. If Bitcoin continues to grow at the rate and pace that we believe that it will, well, you need to take the protection of that asset seriously. That's why the Bitcoin way exists. Members of their team will walk you through proper 100% self-custody step by step so you can remove all counterparty risk, stop sharing your keys with third parties, and ensure you protect your generational wealth the right way. Go to thebitcoinway.com and schedule a free 30-minute consultation with their team. Right now, the global M2 money supply is shrinking. Central banks are tightening and liquidity is drying up. And Bitcoin feels the squeeze when that happens. Here's the twist. When liquidity returns, and it always does, Bitcoin doesn't just recover, it skyrockets. Let's zoom out here for a second. Take the traditional investor approach. The S&P 500 has seen some major crashes over the past 100 years. In 1987, they call it Black Monday, where the market dropped 22% in a single day. If you just held on and didn't sell during the Black Monday, you would have seen a 582% return over the next 13 years. Let's go to the Great Financial Crisis in 2008. The S&P 500 lost nearly 50% of its value. Those who bought during the panic or even just held saw gains of 400% by 2021. Even during COVID a few years ago, the S&P was wiped out by 34% in just a few weeks. By the end of 2021, the S&P 500 had more than doubled. The lesson is simple. Crashes create wealth for the people who have courage to act. And in Bitcoin, it's even more extreme. In 2018, when Bitcoin crashed from 20K to 3K, Bitcoin dropped 83%. But the next bull run brought you a 2,000% gain. In 2020, Bitcoin fell 50% in just a few weeks. Within a year, it was up 600%. In 2022, it fell from 69K to 16K. And people like Saylor were continuing to gobble up Bitcoin. It's not just about surviving during the crash. It's about thriving during the recovery. Bitcoin isn't just another asset. It's a hedge against inflation. Even the US Treasury is calling Bitcoin digital gold. When global M2 money supply rises again, Bitcoin will be the first and biggest beneficiary. Let me leave you with a quote from Ross Stevens in his latest Stone Ridge investor letter. Bitcoin is the most potent device ever invented for transferring wealth from the impatient to the patient. But the question is, how patient will you be if Bitcoin pulls back to 70 or 80K? One way that you develop patience in your Bitcoin journey is by connecting with other Bitcoiners in real life. You join this community where you have accountability and you learn and you educate yourself alongside peers so that when the crashes do come, you don't sell, you don't panic. One of the best ways to do that will be coming to the Bitcoin event of the year at BitBlockBoom, April 3rd through April 6th in Dallas, Texas. Hear from some of the best speakers in Bitcoin like Parker Lewis, Marty Bent, Guy Swan, Bob Burnett, and me. Get access to exclusive workshops to learn how to buy your first Bitcoin, take self-custody, and even do mining yourself at home. You'll get access to meet some of your favorite Bitcoiners at exclusive parties like the Saturday Casino Night. And all of this is included in a single ticket, which, by the way, goes up in price tomorrow. Go to bitblockboom.com and enter the promo code BBB25 for $100 off your ticket. That's BBB25 for $100 off your ticket. Crashes don't destroy wealth. They transfer it from the impatient to the patient. Moments like this don't come often, and if Bitcoin does crash to 80K, see it as an opportunity. Subscribe to the channel if you already haven't. We put out content here 6 days a week, and you want to be educated and prepared for when the next crash comes so you don't panic sell and let loose of the best asset and best opportunity that we may see in our generation. This is Dante Cook with Bitcoin Simply. Happy stacking.